Good morning, everybody. Hope you guys are doing well this morning. Dan, I want to clarify straight from the beginning. Some people have said on the song, it sounds like Dan's 30 years got away. It's not Dan's 30 years got away. It's Dan's 30 years guide.
I like the got away. I like the got away.
Yeah. Well, it fits with the blues version.
Yeah,
that's right. With us today is trusty sidekick Rusty. I'm his sidekick. He's not mine. So, anyway, paying the cost to be the boss is what they say. Anyway, I hope you guys like some blues. Here we go.
Back. Troy's dreaming big like LeBron. Matt's back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Love it. Listen to it in my dreams. Listen to it. Steven says it's snowing where he's at. Shout out Steven in the snow.
Yikes.
Bill, Matt's not going to touch this. There'll be no editing down. If anything, it'll be 4 to 5 times longer by the time I say. Every time he tries to edit it, I'm going to increase it by a minute to where we get to the same time frame we started at. That's my long-term goal. So, anyway, beautiful day. Got some big news today. 2 things, because we just want to jump in this morning. So, 0DT rundown, we have PCE, and the market's just so. So, first off, PCE. This is the first candle. That candle on the right was the first candle. Now, you would look at that and say, well, I don't know the price action, but that looks like a 40, 50-point move down. But what is futures at right now, gentlemen?
Down 22.5 SPX
Okay.
futures.
Okay, so that candle was a 10-point candle. So I think maybe 15-point at the midway point. The point being, inflation has definitely not been the focus this week. Is that correct, guys?
No, that's not the biggest show in town. No,
it's not the biggest show. That's a great way to put it. Yeah. Not the biggest show.
It's old news, right?
That's right. Yeah, everybody's waiting for Liberation Day, as they say.
I like that. Liberation.
That's what. So Trump. I watched the auto tariff speech.
Oh yeah.
And he said this is the preamble to Liberation Day next. I think it's Wednesday, April 3rd. So, Dan, as a side note, one of the things I'm doing just kind of off. I've been automating most of my stuff, but I thought it was interesting. Yesterday, I put a DC on, and I'm anchoring the longs to that April 3rd strike.
Yeah.
Because it just seems like vol's just not going anywhere until that day. But anyway,
that's a great,
that's
a great thing when people construct. I don't do it enough, but I think it's a good idea to, when you're doing mixed month spreads, double calendars or calendars, to take a second and look at the longs, because I've seen situations where I'll have a calendar on, someone else will have a calendar on, and one guy, it's the placement of the long a lot of times can get you out quicker. And I think placing a long where there's projected pandemonium, it just at least keeps the vol up. So you got a free pass, like a monopoly free pass.
That's right.
Losing money on volatility. You still have price movement, but at least from the volatility, a free pass for here. Unless, how does the volatility go away if Trump says, they resolve it, right?
Yeah.
Hugs,
Yeah.
kisses, and it's over,
Yeah. Yeah. No, I think that's right. And so because of that, the market just seems to be kind of stuck. I mean, I watched yesterday in a bunch of different communities, people just get stopped out all day. And what's funny is that these weren't giant moves. I mean, I think at some point we were down 30 yesterday. At some point we were up 18. But at a VIX at 18 to 19, I mean that's a pretty normal range. I mean, that's
the
not
range
a huge...
was only 60 points between the high and the low.
Right.
I say only, but because we've been a lot more. I mean, the ranges have come down a bit. So yeah, you're right. It wasn't crazy yesterday.
I think there's points with especially 0-day selling where you kind of have to I don't know, you kind of have to like step outside of yourself and say, we're going to close like kind of unchanged today. And if you center those strikes around that, you don't want to ride it to expiration, but that would at least give you some guiding light. I mean, we just hovered around 5,700 all day yesterday. And people are like, well, not really. But like, yeah, really. We kind of really did just hold 5,700. And so, but also if you tried to buy straddles yesterday, I don't think that worked great for you because of the vol that was in them.
Absolutely. And you know what, just on your comment that betting it doesn't move, if you look at Friday's close of 56.67 in the SPX, yesterday's close of 56.93, we're up about 25 points for the week. Now you can say, well, we've gone down or we've gone up, but it's the second week in a row we've stayed in the expected move after being the previous 2 weeks we were down under the expected move and it was kind of rocking and rolling. And here it's just been kind of a whimper, unless today is a big move, which it doesn't look like it, basically not moving this week, SPX net. And
yeah, this is the problem of having 1 minute resolution in your back test. We almost need to have like a weekly go back the other way to like a weekly resolution. Because if you had a 8-day iron fly at 5,700 and you checked last week and you checked this Friday, like you're winning, you're crushing it.
Right.
Just ignore all those other days.
Ignore. Yeah.
That's the
easier
goal.
said than done.
I know. Well, this has been quite the journey this week. We have started our one day DT. I keep saying day DTE iron fly, and we started it Monday, and we've kind of been slowly improving it. And shout out to Option Mania Discord. Like you guys it's been fun to watch you clearly improve on the test, albeit perhaps in some more dangerous ways. But I love that. So today we're going to do the final version of it. And then next week, want to go ahead and put it out there early. Next week, you've heard of the 1 DTE iron fly. Okay. You've heard of iron condor. You've heard of a Rick, which is a reverse iron condor. But have you heard of the McRib, the reverse iron butterfly? And next week, we start the endeavor to try to reverse this sucker and see if we can win anything from reversing an iron butterfly. It's going to be quite the journey. It's going to be exciting. I'm scared. I think a little bit at night to myself and I shiver, but we're going to do it. So, anyway,
you need a little bit of fear. It's healthy, Troy.
No, healthy fear is yeah, I agree. So here we go. I was going to say, what's the thing when people give a speech, they say, just imagine everybody naked. But the problem is you never want to say that in the speech. You never want to get up there and saying, I'm nervous, so I'm imagining all of you naked. Anyway, let's continue. All right.
Wow.
Yeah. Just some inner pastor thoughts. All right, here we go. So here's yesterday's fly. This is where we ended it yesterday. And we had improved it, I think, from a 1.6 to 1.9 MAR. You opened the trade at 10:15. And the big thing yesterday, Rusty, is we talked about that old option omega trick, the old option omega hack we found out together, which is Thursdays are terrible.
That's right.
Thursdays are terrible. Thursdays are go get some lunch, grocery shop, whatever you need to do. For these type of short-term trades. And we did caveat that to say, if you're putting on 23-day trades Thursday, if your trade's that sensitive, don't bet 0-1 stuff. That stuff just doesn't work well on Thursdays. And so we simply removed Thursday, and it greatly improved the test. Rusty, have you found that in your own kind of trading some of these short-term strategies?
Oh, absolutely. Yeah, I don't know why. I have some theories, right? Like I know that, for example, VIX futures roll over from Wednesday to Thursday. I know that there can be a lot of news on Friday. Who knows, right? People have all kinds of wild theories, but the backtest shows historically that Thursday is a bad day to bet on no movement. So,
yeah.
I mean, and not just bad idea. There's been like asymmetrically. In fact, there was a backtest that someone had, quite a few people have, where you could do, way out of the money strangles, like let's say 10 deltas, and it had a pretty large positive expectancy on just Thursdays, buying like a 10 delta put and call and just leaving it on and not even having an exit condition. Now it hadn't done as well lately, but for a while there, zero day Thursday. So only since 2022, obviously May, when that was available regularly, but it was positive. It just shows you how that's not a strategy you normally want to do, but it was like, yeah, just buy the stupid thing and leave it on and hope for some, it's sort of like a Wall Street bets version of option omega backtesting. So I don't trade that particular strategy, but if that's a positive expectancy strategy, why would you want to sell an iron fly on a Thursday, right?
Yeah. Well, but it's ironic. I think Troy and I were talking a little bit yesterday. When I think of some of the more successful strategies that I've seen or done, like a 15-day calendar, I put it on a Thursday to get a and you get a little extra help with the K over the weekend. You say, well, why would that? How does that conflict with this Thursday's a bad day? They're both right? Because it's different when you look at a 2 or 3 week trade. Your gamma starting out is going to be like minus 0.01.
Exactly.
So what does that mean? It means your deltas aren't going to move that much day 1 or day 2 if we have a good move. So a 15, 30, 40-day trade, which is a different ball game, can handle a move. Whereas if you're in a 0 or 1 day, that Thursday thing, the Thursday thing could be bad. But what I've noticed is if you're putting on like 8-day, 15-day calendar or double calendar or whatever, they can work really well because, when I was in the pit on Friday morning, most of us before the market opened, we took our finger, right? And we lowered the volatility in the calls because we knew all the sellers would come in. They want their weekend. So it's like there's this mythical thing, right? Because I always say, why would the market makers, they must be the only ones in the world who don't understand time decay. Because why are they going to let you come in and sell all these options? Well, but they're lowering the prices. And that's why if you look at the phenomena on Mondays, why is VIX always up on Mondays? Well, because you'd come back in Monday morning and, okay, I lowered the volatility 4 ticks or whatever it is. I'm going to raise it 4 ticks, because the sellers have gone home, right? So, the volatility levels, I mean, I love a good conspiracy theory, are not controlled by the market makers. The market makers are very small peons in this game. It's demand and supply. If Goldman Sachs comes in and sells 10,000 options, that's a lot bigger than the market makers in the pit. So I think it's that, again, a 15, 20, 30-day trade, the gamma is so low, it can handle the heat.
That's right.
You know.
That's right. So This is Thursday. This was what we left it with. We're going to get worse before we get better. And I want to show you that real quick. So this is a trade where we're still only getting in Monday, Tuesday, Wednesday, Friday. But I've added a filter. And I want you to see how drastically worse this test starts doing with this filter. And hopefully that might give us an indication of where we're heading. So the VIX is doing stuff. It's overnight, right? You're opening, you're closing. And so when you open up your computer in the morning, the VIX, in a perfect world would print at 9:30, but I mean, Rusty, you've seen it, what, 9:38 print the first?
9:38 is the latest I've seen. Yeah.
Yeah. So, but whatever that first tick is, we're testing it to where if the vol has gone down, VIX has gone down, a tiny little percent of a percent, if it's gone down at all, basically, we're going to put this trade on. And again, that's an interesting filter, but what's crazy about this is the results of it. So you would think the vol down, we would want to put something like this on. And I think there's some probably caveats that we can talk about this, but in general, vol down is a really, really, it drastically reduces the trade. Now I've done two things. I've done that and I've added the profit target of 10%. Okay. Now let's do this. Let's go to this one here, because this is what we were going to end on. This is the final test right here. This is the Friday. We've done our homework. We're turning it in.
Drum roll. Do you have a drum roll?
That's the worst drum
yeah.
I've ever
I was more of a guitar player. So this is the final thing. So here we go. We just flippily switched it. Simply switched it. Simply switched it. And basically, we're going to do this anytime the VIX is up any overnight. So anytime the VIX is up any overnight, same profit target, we get the MAR to 2.2. Now, again, let's just recap all the things we're doing if you didn't join the other shows this week. This is a 1 DTE iron fly that we are treating like a 0 day. So we're getting out the same day. We're opening the trade at 10:15 in the morning, Eastern market time, every Monday, Tuesday, Wednesday, Friday, because of the things we just talked about. Thursdays are not great for short-term stuff. We're only putting it on if vol has gone up at all.
Overnight.
We're allocating 10%. We're allocating 5% of our portfolio. And this is our exit criteria. We're going to get out if we hit 10% profit target, which let me just show you this real quick, because this is, you think 10% is not a lot. Well, if you're collecting $4,000 a contract, a spread, a 10% is $400 per lot. So that's not bad for a day's work. Right. 10:15 to 3:50. You're exiting the same day. You're exiting 1 minute before MOC. Now, I saw somebody post in the Option Omega that it actually improved to go later. You guys can play around with that. I'm going to share the test here in a second. You can play around with that. I have found in my own trading, I want to be out 11 minutes before the market, personally speaking. And here's the other two. Here's the big guardrails. You're going to exit when the delta is below 21 from a position delta or above 21 from position delta. And there have been a lot of questions about delta as we've been doing these. So let me just, actually, we have the man here. I like to call him the fixer because he fixes my words for me. Rusty, how did deltas work in Option Omega? When you say position deltas here, what are we talking about? Please explain.
So it's pretty straightforward in the sense that we just sum the deltas of all the legs together, right? And you say, what is my overall positional delta? So if you were to put them in your broker or in another external tool and kind of look at that graph, right, it'll tell you, or even a summary of it, it'll usually tell you what your delta is. What that simply means is, well, this trade, all other things being equal, which they never are, right? Because you have things like vega and theta and gamma. But all other things being equal, well, I hate that term. Will the trade make money if the market moves up or down, right? And so what you're saying here with this delta is that if the sum of all the legs, if the delta is, if you're more than short 21 delta exit, or you're more than long 21 delta exit. So either too short or too long, right? You've gone too far. Get out of the trade.
So obviously the minus 21 is upside, plus 21 downside, right?
Yeah.
That's right. Yeah, you're getting shorter deltas the closer you're getting to that long call. You're getting longer deltas the shorter you're getting to the long put. Now, a couple, again, Rusty, the architect, when I look at that 21 delta, someone just asked me this yesterday. He said 21 delta, but let's say I have 2 lots on. Do I still do it by 21 delta?
Say if you have 2 lots on, yeah, it doesn't matter the number of lots, right? So it's per a single tranche. Assuming the following, right? At least the way that we have it set up in OO. Assuming that you have a quantity of 1 in that column on the left, see that up near the top of the screen, near the Christmas tree of calls and puts colors up there, more like Christmas tree lights. But anyway, where it says quantity 1, so that means all things being equal, everything is a 1 lot, and then we scale the allocation based upon your current account size. And so I think it's probably always a 1 lot below. I don't know if it ever gets above a 1 lot.
For 5%. Yeah.
There's some 2s and 4s. Yeah. So it depends on the premium, right? So if you're 100 wide or 75 wide, the more premium you get, the less risk there is. So the point is it's at those ratios defined above. So a 1 of each one. So if you have a 10 lot of this on, it doesn't matter. It's still just looking at each leg independently. Does that make sense?
Yeah, it makes total sense. Dan, go ahead.
Yeah, so it's not, so Rusty, so it's not whether, if I have 1 contract on,
yes,
it's easy, 21 short on the upside, I exit, 21 long on the downside. If I have 3 contracts on, would it be 63 deltas? Is it looking at it per 1 contract, or
it's looking at it per 1 contract? Yeah.
Okay, so really, if I, like, as Troy scrolls down there where there's a 3 contract,
yes,
one of those is 3 contracts, then it's the computer or the back testing is looking at 63 deltas position to get you out.
Well, it actually takes basically the base position irrespective of the scale up, and then does the calculation. Does that make sense?
That's great.
So it actually doesn't matter if you got 50 or 1. It treats it the same and says, we're going to get or get out based on
1
the basic setup of the strategy, based on 1. Yeah,
I like that. That is neat that it just because yeah, that would be a big confusion for people. It's like, well, what if I have 4? If I have 2?
Yeah.
But if it's taking it on 1, then it keeps it. You can do whatever size you want.
Yeah. And then, if you automate strategies, we can do this for you. But 2 separate things. If you're just taking the back tests, and we do it for you, basically. So it's going to be correct in the sense that it's a 21 delta per lot. We take care of that. We've got it. If you're trading this in your brokerage and you have a 2 lot on, you have to do that calculation. Like, does that make sense? Like, you have to then move it. So yes, if you have a 2 lot on, we're talking 42 deltas position.
That's right.
Either direction. So again, with automation, it kind of makes it easy that we do that for you. And that's one nice thing about automation, to be honest, not to do a commercial here, but we will do commercial breaks.
There's no brokerage firm that's just going to, okay, you got 10 contracts on, we'll get you out when the deltas of, get to 21. Yeah, they're not doing that. Yeah.
And I don't even know. I mean, I'm sure there are some brokerages that'll do like a 1 lot basis or like a 1 lot delta that you could monitor. I don't know. I don't know if they can, if some are not, but anyway. So guys,
I think Tasty does that.
Does Tasty do that? I know there's a beta weighted data. Tasty has a beta weighted delta.
I might be making that up. It might have been a fever dream. I don't know.
Well, that's all right. So, so guys, overall, I mean, Dan, we've kind of gone through this. What do you think of this trade?
I like it. I mean, the only things that's going through my mind is it seems a couple things on the 75 wide. My intuition without the back testing would have been that seems wide for a 1 day, only from a capital point of view. But
sure.
That's what's nice about the back testing. It's saying, well, hold on, we're just looking at the best performer, right? Regardless of the width. I mean, so that would be the only area I'd maybe, how would it look with 50 wide? But you've done that, right, Troy? You've played with the different widths a bit.
Oh, yeah. But listen, this is the beautiful thing about it. Don't ever say, I don't want anybody to ever be like, well, Troy has found the optimized version. I promise you I haven't.
Oh, sure.
So you're saying you found the optimized version?
Yeah, sure. I like the guardrail.
Off the record. Off the record.
What?
No, sorry, Dan.
No, but I like when you think about risk management, especially, double calendars, iron condors, any type of considered a range bound type trade, it all comes down to deltas. I mean, volatility is important, but you're going to win or lose on a trade because your deltas went too far, period. When someone says, well, I lost $500, well, let's look at your trade. Your average deltas going up was X, right? We went up 30 points. Boom. That's about your number, right? I mean, there's other Greeks involved. So I like this position deltas below and above 21 because that's it. I mean, that's what when you look at risk management, you're looking at the graph and looking how the graph starts turning down, right? And that's when you're starting to get in trouble. And so this position deltas to me is the most important thing because that's major risk management. It's like, when do you need to get out to survive? Because that's what everybody does. Everybody stays in trades too long. People have struggled with discipline. So when you've got something that's got the data behind it, I like that a lot. Real curious, how much did it change? If you did put Thursday in there, did it change this a lot, the MAR and everything?
That's a good question.
Let's do the
change
final.
It to daily? Yeah.
Yeah.
Oh, sorry. Go ahead.
No, let's do it. Let's switch it to.
This is the final, right? So Dan said messed around with it a bit.
Well, no, it's fine.
Just hey.
I might just do it.
Take a risk. We're talking about danger and risk.
Yes.
Take a risk.
Everybody's doing it. It's not a big deal.
Yeah.
You trying to find a version that doesn't have it?
Oh, sorry, we don't.
Oh, I'm right. Sorry, I was running the wrong one. This is what happens when you have a bunch.
Like Troy, it's super exciting. We're just clicking, staring at a blank,
a bunch opening. Yeah. I'm closing the other ones now, so I won't have that problem.
I hear lots of clicking.
Yeah.
I saw nothing.
Oh yeah, no.
You did a couple of these this week. How did that? I mean, the market. How did that experience go? What did you?
Well, pretty good. Now, I will say this, the caveat. I put these on this week. Rusty, you didn't trade any of these this week, I imagine, right?
Oh, I did. No. I actually eliminated that. I did have a different filter.
Okay, RSI. So it did trade. I was about to say, yeah.
I found a version that did better, and I thought, let's put it on. Yeah. Because I like having a larger sample size. I'm a sample size guy. Give me more data. Give me more.
Yeah.
I don't want to find some trade that has like 5 occurrences over 20 years. It's like it never loses.
Yeah.
It's like, well, traded.
So I'll tell you my mindset, which is a terrible mindset that no one should adopt. Tuesday, I had too many straddles on at the open because I trade 5 million strategies, and I recognized that 3 straddle strategies had opened at the same time, basically. Mm-hmm. So then, rather than just be smart and close them, I said, I'm going to hedge against them a little bit. And I did a ratio to where I could figure that out. But then I did put these babies on. And I think I got 20% on these babies. It was a day, I think it was Tuesday. We just didn't do anything. Yeah. And Wednesday did the same thing and got stopped out at the Delta.
Yeah.
So it did.
Yeah. So the deltas work. I mean, the deltas work, and I think on a $5,000 spread, I think the delta got me out at like a $400 loss per lot, and so it seemed to do what it was supposed to do, which I was thankful for.
Yeah.
Can you see? Can you see this?
Yes.
Okay, so you make more money. Your MAR is less because the drawdown is just a little bit higher. Now this is still, again,
Capture rate's gone down significantly though.
Yeah. It's just kind of a drag. It just Thursdays is kind of dragging you. You get more data points, you win a little bit, so you get more money, but it just kind of is a drag on the thing.
In the short term. Yeah.
Yeah. So,
all right,
guys, listen. We'll next week the McRib. In honor of that, I will be getting a lot of McRibs, hopefully, if they're available.
Can we talk about? That sauce is weird. I've never liked the sauce. It's alien to me. I don't know what it is.
Well, if you're looking for Whole Foods at McDonald's, I don't.
I'll tell you what. To me, whatever they're putting in that thing, it's addictive. I could, if you told me, the 2 months they come out with the McRib, live off that, I could. There's got to be some drug they're putting in. It's addictive. I love it with that pickle.
I'll tell you what it is. It's the sugar. They've got a boatload of sugar. That's the drug.
I was hoping it was the heroin.
Yeah.
Rusty's going to go to
potato, right?
Rusty's going to go into Whole Foods one day, and he's going to see Dan and I in the McDonald's parking lot, just in a car, just feasting on these McRibs. And
I'll be walking out with my fermented sauerkraut.
Yeah, your pickles
or whatever.
Yeah. Whatever. To each his own. So, but we're not doing. I'll say this: we're not doing the sauerkraut trade next week. We're doing the McRib trade.
Maybe we should do sauerkraut.
McRib.
Well, we'll see. All right, everybody. Listen, on that note, futures are not doing much, and happy trading, and survive the crash today.
Yeah, that's right.
That's right.
Have a good weekend, everybody.
All right, guys. See you soon.